Hello traders, welcome to the Elliott Wave Street weekly update. I'm Juan Maldonado and it's a pleasure to share with you some of our trading plans for this week. We're going to check the euro dollar, the euro pound, the S&P and oil, CL. Let's start. Alright, so here we have the euro, which has been moving down over the last weeks. We have been working with our members on training them on how to find the trades even if a wave gets extended. And this is a special skill that you need to learn when you are using the Elliott Wave Theory or any cycle theory. It's important that you have to be ready for those cycles that become extended and extended and extended, because you need to survive. Your main plan is not losing money. So one of the key things that we have been working on the euro, last week we were signaling this as a sell trade following the trend. Then when the price reaches the low, we focus on buying the euro. So here is a setup and here is another setup that we were seeing last Friday. Buy trades, of course. If someone is short, it needs to buy on the upper side of the trend. The next step in this process, traders, is finding if this is the low of the market, if this is the end of the wave, if we are going to start trending up or not. And that's where the Elliott Wave Theory comes to help us understanding how to confirm or not that that's the low. One of the key things on the Elliott Wave Theory is the 5-wave sequence. So when we have a leg down and then we have a wave 1, 2, 3, 4, 5, the beginner gets overexcited and says, okay, it's the end because I'm having a 5-wave sequence. But nope, that's just the 50% of the pattern. The next step is looking for the test. The test in the Elliott Wave Theory should be a 3-wave sequence or combination where the price moves on the opposite direction as the 5-wave sequence, but in a slow pace. We can't have fast price happening during the corrective leg because that will cause an invalidation. So, for example, if you are looking for your corrective wave and instead you start seeing some fast price action, it's going to take out the previous low. But of course, the beginner, because has the 5-wave sequence bias, is going to start buying at the Fibonacci levels, which is a huge mistake. So, in this process on the euro, we already have our wave 1, the second wave, the third wave. Look, the wave 4 moving inside wave 1, which is a diagonal wave. We are in the wave 1, so that's completely fine. So here we need to have in front of us the 5-wave sequence that we don't have yet. Once we have it, the next step is the test. Once we have a successful test, we can start buying after the second wave. If the price, first of all, here is the entry 1 of this process, this low here, and these will be the entry 2, the second entry after the second wave. Let's suppose that the price starts selling off after the 5-wave sequence or before too fast. Let's suppose that the price starts selling off strongly, so entry number 2 is not going to happen. And entry number 1 was already at the break-even because the stops should be just under the low. If the price takes out this low, it would be a break-even trade or a small profit trade, but the second entry never happened. When the price rejects this area, we will restart the process as entry number 1 because we continue following the end of the extension, the end of the extended wave 4. On the other hand, the seller, of course, can act on this area. So sellers are at the upper side, buyers are at the lower side. I'm part of the buyers. With patience, I'm finding the end of this corrective leg. Seems that is starting the process. Let's have a look at another instrument, is the euro pound, another interesting instrument for this week, that is the euro pound. On the euro pound, look at this beautiful signal to sell it after the wave 4. So we are looking for a fresh low. When the price builds the fresh low in this last impulse, we have to get ready because right there is going to start the next corrective wave. Once that wave is done, could be there, could be higher, we don't care, because we're going to look for the structure. We're going to sell it to capture a big wave 3 down. So this is a process that requires validation step by step. Don't forget that as technicians, as market technicians, we are not forecasters because traveling in time is not possible. What we do here is we understand the present and we transform that present in trades with supply and demand. This is the S&P traders. The S&P has been fantastic. This time, the S&P has been providing several entries. Last week, we were showing like 6 or 7 entry points where most of them were successful, break-evens, or little losses. Actually, there was only one stop loss that happened here. This was a buy signal, but the price continued down fast. Okay, that's fine. The seller, of course, will be extremely happy selling at the other side. I'm a buyer in this case, so I'm working on that process. And after this drop here, this acceleration, we activate sell trades last week, following the trend. But today, for the first time, we are going to have this week our next bullish entry point. So right here, for example, could be a sell trade. Right here could be another sell trade. But right here, traders, if the price comes here and we have our rejection after absorbing all the sell orders, that's going to be the buy trade on the S&P. So that's one way of triggering, going against the trend, and the other way of doing this trade, of finding the trade, the entry point, is waiting for the 5, similar to the process that we are doing on the euro, the test, and buying here after the second wave. So we can either follow entry number 1 or entry number 2. Which one is better? They like the one that you like more. Are you a trend follower or are you a counter trend trader? That's it, right? So this is for the counter trend traders, and this is for the trend traders, and this is for the trend traders to sell it, following the trend. It's a great exercise, and when you practice and you practice and you practice several times, you are gonna get it. Look, let's have a look at the previous retrace on the S&P so you can have an example of what I mean. So, for example, here is an entry point. That's a buy trade, didn't work. Clearly, the price continued lower, deeper than expected. After this sell-off, nothing to do. Wait for the next signal. This is the next signal, and this is the profit list. Work nicely. Let's have a look at the previous one. So on this one, the extension was similar to the actual one, and we start seeing signals here, then here too. After this extension, here was the next one. So probably 2 losses, 1 break even, and a home run back to the previous high. So as you can see, is quite tricky sometimes finding the end of the corrective wave. But the edge that we have is that we can risk 1% or less per trade, knowing that we can get stopped out and that we are going to trigger again, because that's the process. The importance is keeping our bias, understanding the process. And we know that with patience, we are going to capture the home run. So a leg like this one, like the one happened here, is likely to happen again here. So with patience, we are looking for that trade. But again, the benefit is that when we trigger the bullish trade, if we execute at the right price, we are risking just a tiny part of the account. And if at least it reaches a 1-to-1, we have a safe trade. Because the stops are tiny, we have that huge advantage because we can easily have a safe trade. That's the beauty. But if you are short, you are going to trade on the other side of the setup, following the trend. This is oil. Oil is another fantastic setup that we have been following. On the membership, we were finding the end of the B wave with the same process. So that was a successful setup. Now, the next step happened today. So we got this rejection here. And if we even want more, here we can have another one. Probably. And the plan, traders, is that we are looking for a huge wave 3 down, a big sell-off in oil. That's why we're just thinking and we're just looking for sell trades. This is a process. This is a process that you need to practice, that you need to learn how to use the Elliott Wave Theory in the proper way, in the right way, because most traders are applying the rules and applying the guidelines, but at the end they don't know how to transform all that information into profitable ideas. So that's the process on Elliott Wave Street. On Elliott Wave Street, you are going to learn Elliott Wave, you are going to learn institutional cycles, you are going to learn how to transform the information into good executions, good setups, good turning points with low risk, and having always a good advantage that even if you are wrong, you can have a little loss or most of the times a break-even trade. And that's a huge benefit when you learn this technique. So if you want to learn more about this system, on ElliottWaveStreet.com, under the membership tab, you can find our plans. We have a special trial for just $19 the first month. So if you trade Forex, stocks, or everything, you can pick your plan and you can start immediately checking all the videos that we have here. You will get access to all the previous analysis. You will get access to charts. You will get access to education. We have a fantastic education course inside with the Members Academy course, with the Momentum course, with the Elliott Wave Crash course, and more. So you can sign up and you will get immediate access. So that's the plan. Please have a fantastic start of your week. I'll see you soon. Take care. Bye-bye.